Hi, my name is Zhenli Lin, and I'm going to introduce two companies today, which are Netflix and Disney. This is my table of content. First, I will introduce the three most important financial statements, and after that, I will introduce the basis information of the company Netflix and analyze its financial statements, then talk about Disney's information and also analyze its financial statements. Finally, give my conclusions. So, whether you are a manager or an investor, financial statements are crucial for understanding a company's financial health and operations. In this report, we will analyze the financial statements from an investor's perspective, focusing on profitability, earning capacity, and capital utilization. This approach helps us evaluate whether the company is a worthwhile investment. Let's talk about balance sheet first. As a student majoring in finance, we already knew that assets equals to liability plus stockholders' equity. Therefore, the balance sheet will display the assets, liabilities, and total equity as of a specific date. It also reveals a company's sources and uses of funds, reflecting the overall condition of a company. And from income statements, we can find out a company's operating revenue, operating costs, and operating profit at a specific point in time. This information provides insights into the company's profitability, profit margins, and operational performance, essentially helping determine whether the company is profitable or not. Last but not least, statements of cash flow breaks into three parts: operating activities, investing activities, and financing activities. It indicates a company's cash flows and outflows at a specific point in time, providing insights into the sources and use of funds. By observing the company's cash management practicing, it ensures the company's long-term sustainability and development. This is an introduction of Netflix. Netflix started back in 1997, initially focused on DVD rental services. In March 2011, the company transitions into a streaming platform. With the introduction of original content, Netflix's popularity surged. It entered the Taiwanese market in 2016 and is listed on NASDAQ under the symbol Netflix. Embracing streaming services, Netflix gained prominence, offering subscribers instant, reliable content without relying on physical DVDs. Committed to diverse offerings, it boasts a vast library of original productions and collaborations with major studios. As a leading global streaming platform, Netflix's influence continues to expand. The company prioritized technological innovation and content development to meet evolving consumer demands, and ensuring its prominent position in the entertainment industry. Look at the balance sheet. As we can see, cash and cash equivalent increased, indicating the company has a larger cash reserve. Both current and non-current assets also saw a slight uptick, suggesting an overall expansion in the company's scale. As for liabilities and stockholders' equity, compared to the same period last year, current liabilities have increased. Although long-term borrowings decreased, there is an additional short-term loan, and the number of common shares outstanding has decreased. I suggest the company may have engaged in share buybacks or other actions. Next, let's look at the income statements. Netflix income increased in the third quarter of 2023, and for the 9 months ending September 30, 2023, the net income also increased compared to the same period in 2022, and the comprehensive income also have a progress. Next is statements of cash flow. From an operational perspective, we can see that the operating cash flow is positive, and net cash inflows is higher compared to the same period last year and the previous quarter, indicating that the company is generating more cash flows. And from an investment standpoint, the capital expenditures in Q3 By the word, I mean the purchase of property and equipment, are lower compared to the same period last year and the previous quarter. From a financing perspective, financing cash flow is negative, indicating that the company has indeed repurchased a significant amount of common shares. I speculate that the company may be optimistic about future developments, considering its stock price has recently increased significantly and plans to continue through share buybacks. Next, let's talk about Disney. Disney Company, headquartered in United States, was founded by Walt Disney. Its diverse business includes Disney Animation Studios, Pixar Animation Studios, Marvel Studios, Disney theme parks, and more. Classic animated films like The Lion King and Frozen are part of its portfolio. Disney also owns media networks such as Disney Plus. Disney Plus has expanded globally, providing audience with on-demand access to classic and new Disney content anytime or anywhere. With continuous content updates and the introduction of new productions, Disney Plus has attracted a diverse audience, establishing itself as a significant player in the streaming entertainment industry. The Disney Company holds a significant position in entertainment and wields profound influence in culture, tourism, and media industry worldwide. Look at the balance sheet first. The company's total assets have slightly increased compared to 2022. This is primarily attributed to the growth in cash and cash equivalents, accounts receivable, and other current assets, and its current assets have increased to 32,763 million. Its total current liabilities increased to 31,139 million, and shareholders' equity also rose to 99,277 million. Next, let's look at the income statements. Net income of the year 2023 decreased compared to the previous 2 years. And about statements of cash flow, the operational perspective, we can see that the company provided more cash from operating activities in 2023 compared to the previous 2 years. And from an investment standpoint, the company utilized 4.641 billion in cash for investment activities in 2023, primarily directed towards investments in theme parks, resorts, and other assets. And from a financing perspective, we can know that the financing cash flow is negative, indicating a reduction in borrowings. There is a significant change in the reduction of borrowings, this decreasing from negative 4,016 million to negative 1,675 million compared to the previous years. I guess there might be a reduced amount of loan repayment by the company. And before we draw our conclusions, let's take a look at this chart from FineGuider. Disney's subscriber amount has been growing from 2021 Q3 until 2022 Q3, but there's a slight downward trend afterward. On the other hand, Netflix subscriber amount is consistently increasing year by year, with the implementation of Netflix Share Account Payment Scheme. The global user amount grew by 10.8% year to date and 3.7% of the quarter ending in Q3, showing positive responses in all operational regions under the new plan. And from the financial statements of these two companies, we can have two conclusions. First, Netflix financial performance exceeds expectations, with a remarkable growth in subscriber numbers. And second, the income statement indicates that Disney's performance this quarter is not as strong as before. However, the CEO has announced upcoming strategies and a commitment to continuing the proactive management of cost basis. So, in my perspective, both of the companies are worth to invest, not only because they are big and international companies, but due to their financial statements. Even though Disney didn't have such good performance as Netflix, but it is still a steady company. And this is my resources. And this is my work distribution chart. And thank you.